All right, welcome back everybody to another video. Today is going to be part 2 of the trading patterns tutorial series. So this is part 2 of 3. Today we are going to be focusing on continuation patterns. So that's literally just going to be the opposite of what the reversal patterns are. Makes sense, right? The name is literally just what the name is. So there's nothing hidden about this. It's actually kind of the same strategy that I discussed in the first one. So if you haven't seen the first video, make sure you go back and watch that video first, along with my other tutorials. So all of these tutorials are building on each other, right? So first I did candlesticks. We looked at trend lines, support and resistance. Go back and watch it, because as we start getting into more advanced stuff, if you missed one, there's going to be a concept in there that I'm going to reference, or that I abbreviate or something that you're not going to know what it is. So make sure that you watch all those videos first in order before moving on to the next one, okay? Consider this like a whole just training platform, okay? Except obviously it's for free and you're not paying thousands of dollars for it. I am your host, Cobra Trading. Welcome back to the stream. If this is your first time here, make sure that you smash the like and subscribe button so that you don't miss out on any of my tutorials or analysis videos in the future. With all that said, let's go ahead, hop right into the charts. Let's learn some patterns. All right, everybody, down here in the bottom left corner of your screen. And these are the patterns that we're going to be talking about today. There's actually 6 of these, but they're basically just like last time. There's 3 of them and then they're reversed. So literally, if I just invert the scale real quick, boom, there's the other 3. Okay, so we're going to go over these one at a time, and then I'll do what I just did, flip the chart, and I'll explain briefly what the flip side of these and what to watch out for those. Okay, so just real quickly, the wedge, the flag, and the pennant. Those are the 3 that we're focusing on today. Now, I know what you're thinking is that maybe these look pretty similar to each other. They're both coming off of a big uptrend, and now it's in, kind of like a correction mode or consolidation mode. That is 100% correct. However, these patterns differ from each other very, very slightly, and I'm going to explain what that is. So first, with the wedge, you're going to notice here that compared to these other 2 patterns, you've got the price action that's elongated over a period of time, and it's constricting to a very, very, very tight range in the end. It didn't really have too much of a significant correction at the beginning, but the range just keeps going on and on and on and getting tighter and tighter. And by the way, I mentioned this in my last video. None of these patterns are 100%, okay? Like, I normally tend to say that in crypto specifically, these patterns are really only 50 or 60% reliable. The reason for that is a couple things, but the top 3 reasons are it's less liquid, it's more manipulated, and the patterns are never 100% anyway to begin with, okay? So those are the main reasons why you're never going to want to trade on these patterns alone. You're always going to want to be looking for other ways to find confluence. Confluence means that your trading idea is confirmed by other strategies that you're using. Now, that could be an indicator, that could be support and resistance, that could be volume, it doesn't matter. But if you're going to be trading these patterns, you're going to want to make sure that you find confluence with other things that you use on your chart, so that it verifies your trading idea, right? You wouldn't trade off of a pattern alone, just like you wouldn't only trade off of a support level by itself. So with that said, basically with this wedge pattern, bullishly, you're coming into it from the downside. You see that long period of consolidation with constricting price, and then normally the price ends up shooting up here. Okay, so that's normally what ends up happening there. Okay, how are you going to end up trading this? So what I always like to do, this is going to be really similar to the other patterns. Okay, so this would be your entry, upon breaking the top of this trend. And where's your stop going to be? From where your trend lines are drawn, that's where I like to put my stop. So where is your take profits going to be, right? So of this entire first leg, you're going to be wanting to target at least half of this entire move to the upside, right? So, you want to be targeting at least, like here, there was a resistance level up here. So like you'd probably want that, to be your take profit 1, right? And then if you're going to have another take profit, you'd want it somewhere up here, obviously, right? So this is the kind of thing where you would be looking left on the chart to find confluence with other levels of resistance and stuff to be taking profit at those. Okay, so pretty decent risk to reward ratio on wedges. This is going to look very, very similar, right? We've got lower highs, we've got lower lows, and it's consolidation after an uptrend. So normally what happens, again, none of these patterns are ever going to be 100%, but normally what's going to end up happening here is you end up getting a break to the upside, right? So just like this pattern, you normally end up getting a break to the upside, okay? You're going to enter on the break, you're going to put a stop below the last low, and then your targets, obviously, these would probably be way higher, but you get the idea. Target 1 would be up here. Target 2 would be like way, 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 way up here, something like that. So that's pretty much the bull flag. That's what that looks like. And we'll go through and I'll show you these on the actual chart. Moving on to the pennant, right? So we've got that really, really big constricting price action. The biggest difference between the pennant and these other two patterns is coming off of an uptrend, you've got a pretty significant initial correction here, right? So that's a lot farther of a dip than in the wedge or the flag. You see in big price swings, but still you're getting lower highs and higher lows, symbolizing that the price action is constricting. So how do these end up playing out? Well, coming in from the downside, this is a bullish pattern, bullish pennant. So it would end up looking something like that. Now, again, you'd be putting your take profit, somewhere around here. And then you'd have your take profit 2 over here. Entry would be here upon the breakout, and your stop would be here below the bottom. Now, sometimes with pennants, depending on how volatile it actually is and how large the range is, sometimes I'll actually put it below this. So like we had our first low here. Usually what I do, I'll say usually, not most of the time. Usually what I do is I'll put it actually below the second higher low that we had, just to play it safe, because if you put it right here, that's normally going to be like, okay, you're going to end up getting stopped out. Like what happens if there's a throw over or, some kind of volatility wick that ends up stopping you out of your position before it takes off. To kind of protect myself a little bit from that, I like to put it below the second higher low of the pattern. If we flip these over, these are going to be the bearish pennants and wedges and flags. Okay, so it's literally just the exact same thing, just flipped upside down. So there's not really anything else to explain with that, except you're playing the downside of the move. So, you'd see a big downturn. It looks like it's getting bullish. Some people are willing to buy. Some confidence is coming into the market. Buyers end up closing orders. Short sellers are stacking orders, and the price ends up breaking down. And then you'd end up finding support down here or something. Let's go ahead and take a look at the chart and actually find some real life examples of these. Okay, so as I mentioned before, it's going to take you some time to get used to actually spotting these on the charts. Practice makes perfect with these. You're not just going to look at the chart and be like, oh yeah, look at that. Look, there's one right here. There's one right there. It's going to take you some time and practice, going through price action and stuff. And nothing says that you can't go back through price action like I'm doing right now and just practice spotting these and drawing them. Do that, don't wait for them to occur. The reason why some of these patterns are really, good to be traded and stuff is learning and teaching yourself the ability to be able to spot the pattern as it's forming versus spotting it in hindsight, which is, just me going through and being like, oh, look, we had constricting price action here. Bam, boom. Oh, look at that. We had a pennant here. Bam. And we shot up to the upside. That actually is an example of a pennant. I drew it pretty terrible, but that's an example of a pennant right there. We came up, we found a big base here. We shot up to the upside. We had a pretty drastic retracement here, and then we kept constricting price action and going back and forth until we had a continuation to the upside. Let's go ahead and find a bull flag. Okay, well, here's a bear flag. Had a dip. Looks like we had a channel here. If you connect all the wicks properly, this looks like a bear flag, and then we continued to the downside once this broke down. So nothing surprising there. That's pretty much a classic bear flag. A bullish one would obviously just be the opposite. There was actually another one here. This actually looks closer to a wedge. If you connect all these wicks properly, this is actually a wedge here. Came into it from the downside, broke down, more downside. Once you start looking at these patterns and you start looking at the charts and trying to identify these, you're going to have an easier time spotting them. Okay. So, this was in a downtrend. So like, let's look at this uptrend and see if we can find something similar. Okay. Here's a really good example of a bull flag. Had a huge move to the upside from here. And then we had a channel here and then more move to the upside. So that's a pretty classic example of a bull flag going the opposite direction. Once you get better at identifying the patterns on the actual chart, you're going to get better at actually being able to spot them as they're happening. And that's really the real challenge with pattern trading, is being able to spot the patterns as the patterns are happening. So to me right now, like, this is the current price action. What pattern does that look like to you? If you said bull flag, then I would say that you're correct on that. We had this massive move to the upside. It might not be the most perfect one, but it is a channel nonetheless. Haven't really closed below it if you connect the wicks. So, I would expect maybe a little bit more downside here, maybe one more lower low, and then more upside here. So a little foreshadowing on analysis for you guys. Maybe we retest these highs. This is where one of your targets would be, right? So if I was entering here, I would want, if we did get another low, which it's looking like there's a lot of bearish resistance here, as you can see from the wicks on these candles, I would be wanting to place my stop below, this low. So for right now, I would have my stop here. This is where my stop would be. I'd be waiting to enter when this broke. So about here, this would be my entry. And my first target would be this high. And this would be my second target up here where this previous high is. Or maybe let's do the candle bodies just in case. Again, is this going to be a guaranteed thing? No, not really. You're looking at about 3-to-1. So not too bad right there. All right, guys. So that's pretty much it for today. I hope that you enjoyed part 2 of this tutorial series that I'm doing on identifying trading patterns and teaching you how to trade those patterns. Thank you again for all of my followers. Thanks for the love and support. If you're new here, make sure that you smash the like and subscribe button so that you don't miss out on part 3 of this trading tutorial. Until next time, I'm Cobra Trading signing off. Have a wonderful day, and I'll see you next time.